What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a NIO, raw price action and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could join ARCab, our trading community on Discord. Okay, you guys, let's go ahead and dive right into the charts right over here. So we're looking at NIO on the 4-hour chart right here, you guys, and we were actually tracking NIO making this descending broadening wedge, and we actually did fulfill a breakout. And that is following what I mean. If you're a regular viewer of my channel, actually of a reader as well of Twitter, you'll know that I talk about the golden rule of three very often. So that's where we test the resistance 3 times, followed by a capitulation event, and then an attempt at breaking out for a true breakout on test number 4. So there are a couple things that I would like to touch on right over here, you guys, before we talk about all the bullish case scenarios, because in my opinion, NIO is looking very bullish, you guys. But okay, on this breakout, we have still not made a retracement to test our newly converted resistance into support. That's typical for a breakout at a formations like this, you guys. So, I mean, there are the events to where it doesn't happen, or it doesn't happen all the way, but but it is normal for this to happen, you guys. Another thing is that now, sorry, that was a lot of water I drank. Now we actually have a support range over here comprised of this gap. So on the 4-hour chart it's visible. I'm sure it's visible on other platforms as well, but I want to just go ahead and make sure that we note this right here together so we can see the potentials of a downside, right? So okay. So the range for this gap, you guys, is and it's right in between the knot 382 at 1022, but we have 996 to 1055 as a gap right down here, you guys. So if there is a potential for us to reverse, it would be likely to come and test the support bottom of this gap, thus testing and confirming the broadening descending wedge, newly converted resistance into support, you guys. Raw price action doesn't look too bearish right now, you guys, but actually, you know what? I can see, just based on raw price action, right, guys? This is discretionary as hell. But I can see that we can touch the knot 786 at about 1218, or actually, this is a resistance range right here, you guys, and it's in accordance to the high of this candle right here and the closures of these the wick lows of these candles right over here and this one. So we can see a potential test to either 1292 or 1218, it looks like, before reversing. Now, we are at a pretty good support level. We have broken above the knot 618 inverse ratio, which is a very good ratio for us to use as support. It is strong, but please do note that this is actually following a typical formation breakout setup. So this is, I mean, we have to factor that in, you guys. We may be able to see a touch of this, and it could be a rather quick touch, similar to what Wyckoff theory calls as a terminal shakeout or a spring of sorts. Okay, so let's go ahead and just open up some moving averages to see what's working with us. So you can see that this candle has used a 7-day exponential moving average as a form of support. This is the 30-day exponential moving average, and we have actually since crossed above it. So this is very bullish for price action, you guys. And another thing is that the moving average, the 30-day period, is also within this range that we're talking about. So it could also fail the 7-day period just temporarily so that we can test this 30-day period before a continuation onto the upside. This doesn't have to happen right away, you guys. This is just me telling you what the charts are kind of like saying, right? We are also above the 50-day moving average and the 10-day simple moving average, you guys. So the 7-day has now crossed all of that, which is very bullish. Also in confluence with the resistance range that we're talking about, the 100-day simple moving average is right there. So this is this is a pretty strong resistance as well, you guys. So there two scenarios can happen here, you guys. We test this resistance range, and then we come back and test the NOT 61H. The NOT 618 as a form of support before a continuation to the upside, or we do what's likely for a formation like this, to where we use the resistance range right over here. We fail temporarily the NOT 618 and use this as I guess an opportunity to close the gap and also test our newly converted resistance into support, you guys. So let's go ahead and move on to the next chart and see what we got. So this is the weekly chart, you guys. This is a macro perspective. As you can see, we're also in a similar setup as this immediate short-term time frame descending broadening wedge. This is a macro scale reversal signal that NIO stock is giving, guys. So this is looking really good long-term for NIO. We actually touched, the last time we made a video, we actually talked about this candle printing and touching right at the support that we were looking at here, you guys. And also we have since closed this massive gap that actually existed from back here in June of 2020, you guys. So we definitely closed this gap. We have solidified it for sure. We still have in another time frame, we have another gap right down here, but we would have to open up other time frames, you guys. It's not relevant right now. We are actually on the way up now, in accordance with the 1218 target that we spoke about right over here. It's we have some rhyming right over here, so it would be close to the to the 7-day exponential moving average on the weekly chart. So if you can see, we can draw a trend line at the 1218 mark, just so you can see how close it actually is to that, you guys. So this line right here, the red line, is 1217, and you can see that we're very, very close to that. So with a continuation to the upside in price action, we can actually see the 7-day exponential moving average start to pivot and eventually touch where we could use as resistance, which is the resistance that we're speaking of right over here, you guys. So there is some rhyming within the price action happening right here. This is a massive green candle, you guys. Huge buy pressure. Okay, so let's and just real fast, for both of the descending broadening wedges, they do have a price objective that people usually tend to take the trade to. First of all, we have completed the 3 tests, and now we're in that capitulation event, and now we're in a potential recovery so that we can make a true breakout on the 4th test before coming back and testing this newly converted resistance into support and trekking our way up over the next months, actually, to 67.18. I can see this realize, you guys, in a few months or a couple months. This is a weekly chart, so it's going to likely take some time. Yeah, definitely months. Okay, so let's move on to the next chart, you guys. This is the statistical side of things, and some very, very interesting things are happening right over here, you guys. So we can see that, okay, for the new viewers, this is volatility. We're looking at volatility represented by this indicator, BBWP. Volatility is direction neutral. So in order for us to gain a bias and direction from these critical expansive highs, which I can consider anything above 90 percentile, which you can see the percentage values right over here. Anything above 90 percentile would be critical zones, and anything below this range right over here, 15 percentile and below, is critical contraction. So this is critical expansion, critical contraction, right? So we pair it with a momentum oscillator similar to the stochastic momentum indicator in order for us to gain that bias and direction, you guys. So right now we are now starting to contract from critical high levels, and stochastic momentum is suggesting a continuation to the upside. This indicator has proven to me in several tickers that it has an accuracy of about 75 to about 85-90%, right around there, in accuracy of guessing the upside and the downside, you guys. So it is not perfect, but it is very, very good to consider or to factor in the metrics. Now, the historical volatility backtest that I have run is actually it's comprised of this criteria. it has to be above the 90 percentile, which is critical, and it has to contract to the downside. I have taken note of every single iteration where NIO stock has done that. The duration based on that iteration, the upside thrust versus correct and incorrect guesses to the upside. These are the metrics here, you guys. Out of a total of 5 iterations from the beginning of the trading of NIO stock on the 2-day chart, we're looking at a total of 4 correct, which gives us an average upside accuracy of 80% with an average upside thrust of 257.53% over the span of about just over 84 days. So this is something that can be applied to the trade right here, you guys. So if we apply the 257.53% metric to the price action from the firing of the signal, we can actually, it would be right over here to where we're at. So we can put it from here all the way to the top, and it takes us to a target of 38.74. Please keep in mind that this is over the span of an averaged 84.25 days. These are statistical metrics. They are not certainties. Please know the difference, you guys. So this is particular for us to check out a few targets that are desired. Now, I drew this implied path for the 200-day simple moving average for things that are likely to happen, and it looks like since this is the 2-day chart, so you're looking at slow movement right here, you guys. So it is the 200-day is following the implied path that we were talking about. But the most interesting thing of this, you guys, is that it takes us right, 257.53% takes us right to the golden ratio. And the golden ratio is a very particular area for us to take the trade to. It is, now we have a resistance range of 37.43 to 38.74. And as you can see in previous price action, we have used this range very much, I'm sorry, we've used it a lot, you guys, and this is likely a key resistance, and it is also likely an inflection point. So you can see all the resistance and support areas touched right over here, you guys. This is a very desirable target to take the trade to. So this is what I mean by things are looking very good for NIO. Now, for the immediate short term, let's go ahead and look at some RSI. New listeners or new viewers, please take a gander at this. This is the bullish control zone, upper half of the RSI. This is the bearish control zone, lower half of the RSI. The inner workings are the bear and bull weakness percentile, and the outer workings are strength percentile for the bulls and the bears, you guys. So 30-minute time frame, immediate short term, is suggesting a continuation onto the upside. This could be temporary, and you can see that we're actually starting to use the moving average as a guide to the way down. So we have to keep that in mind, you guys. The buy hourly is actually it's retracing from an overbought percentile, you guys. The moving average is continuing onto the upside, so this can likely be used as a form of support before a continuation up, which backs our thesis about coming back and testing some of those targets within this chart right over here, you guys. We've been testing this or this range, or and also our newly converted resistance into support. Now, the 6-hour chart is suggesting some downside as well. The pivot is not so, it's not so exaggerated to the downside. It is gradual. The moving average is still below us. We're moving to the upside, and we are well within the bull strength percentile right here, you guys. So the 12-hour chart is suggesting that same type of slight downside, and the moving average is way below us, so it's still looking a bit bullish, you guys. I can see a potential short-term retracement before recovery to the upside, you guys, but the data is suggesting a massive move to the upside, you guys, and that is immense. So in order for us to validate that criteria, or in order for us to meet the criteria to have that impulsive move to the upside, we need both the volatility component and the moving average of the BBWP indicator, both pivoted to the downside alongside momentum oscillator with the moving average and signal line towards the upside. And thus far, it's looking pretty good, you guys. And this can explain why we have made an impulsive move to the upside. Please know that on the 2-day chart, we have now converted the SMA 10 as a form of support, which is at, let's see, at about $10.95. Now, just in case we want to see if there's any confluent targets at 10.95, 10.95 would be, let's see, yeah, it would be right at about the high of this candle right here, you guys, which is confluent with all of these candles right here. So there's a chance that we can use this and the EMA right here, the EMA 7, which is at 10.90, you guys. Yeah, it's very confluent with the EMA 7. So that price action is likely to happen, you guys. But please take whatever I do say as a form of entertainment. I need you guys to do your own DD and we'll be okay, right, you guys? But I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Twitter, on Discord. I'll make sure to leave the links in the description below, and for you to consider joining the ARCa trading community, you guys, on Discord. So yeah, with that said, I wish you well, and I wish you a great weekend, and I will catch you at the bell on Monday. Adios.